Awesome. All right. I want to welcome everyone to today's webinar. If it's your first time here, my name is Brian Alfaro. I'm the Director of Investor Relations here at Headway Capital. I've got our CEO and founder as well, Sid Shamim. And we host this monthly webinar every month and have for the last several years, really just to help educate passive investors on different facets of multifamily investing, different facets of commercial real estate investing, and also to help people grow with their investor knowledge and their education so they feel more confident in their investing decisions. So if it's your first time here, I want to say welcome. If you're a repeat customer, as I like to say, welcome back. I'm excited to have you here. And for anyone watching the recording, also thanks for watching the recording. We'll make sure contact information is all shared at the end. And of course, if you have any questions, you can always reach out to Brandon himself or a member of our team. Really excited about today's topic. And we're going to talk a little bit today about if you're a passive investor and you've maybe thought about taking the next step. You don't necessarily want to be a full-blown operator like we are. You don't want to be somebody who's managing tenants and toilets, as they like to say in the industry. But you want to kind of maybe sit somewhere in the middle. You feel like you can add value in the capital allocation space, which is essentially maybe bringing some of your friends and family, colleagues, people you've met over the years into these investments with you, and how you can financially benefit by doing that. I don't want to steal all Brendan's thunder, but we're going to talk a little bit about that today and how you can kind of get started. But just real quick, just some quick housekeeping. If you have any questions, please put them in the Q&A box. We're happy to kind of answer those at the end of the show. And if anything interesting pops up, I can always just interrupt Brandon for him to talk. A little bit about our firm real quick. I don't have my slide deck up. I'm having some technical difficulties, but like I said, I'm the Director of Investor Relations here at Headway Capital. We're a private real estate firm based in Houston, Texas, that was designed to build and protect the wealth of busy professionals. And our mission is to offer best-in-class investment opportunities that provide cash flow, tax benefits, and of course, equity appreciation. So we can put your money to work in alternative assets, right? We want to help our investors achieve their financial goals and their financial independence. We've been around since 2017, 2018, so got about 8 years of experience. We have about 3,000 units in our portfolio, and we have over 500 active investing partners that have been given us their hard-earned money, written us a check, and trusted us with their capital to put it to work. So lots of great experiences and references we can share, and we have a great track record. So always excited to share that information with all of our listeners. And if you have any questions, like I said, please feel free to reach out to anyone on our team. But without further ado, hopefully Brandon's screen sharing works. I want to introduce Brandon. I don't want to mispronounce your last name. I'm going to say Klaus. I think I said it right. How do you pronounce your last name, Brandon?
It's Clace. It's Clace.
Clace. Okay, I was close. So Brandon's going to tell you a little bit about his title, but Brandon is from an awesome company that provides a turnkey solution, and they're partners of us here at Headway that allow investors who are interested in taking that next step. As I was mentioning, they're interested in maybe they're talking about their investments with their social circle, their friends, their family, their colleagues at work. And they're thinking maybe they want to participate a little bit more. They like writing those $50,000 or $100,000 checks and being a passive investor, getting that mailbox money, but they're constantly being asked or poked by other people like, hey, I want to get in a deal with you. Hey, let me know about the next one, right? So this is I would say a unique opportunity that our firm provides, and a turnkey solution that our firm provides, where you can essentially bring some of those friends, bring some of those family, bring some of those colleagues into these deals that we have offering and actually financially benefit from that. So today, Brandon's going to introduce this sort of process with you, and this vehicle, I should say. He's also going to talk about how you can financially benefit. And then the big thing we want to make sure that we talk about today too, which Brandon's going to spend time talking about, is how we do this in a compliant way, and then how we do it in an easy way to make it as turnkey and as easy as possible for all of our passive investors that are maybe growing into being a slightly more active passive investor, as I like to call it. So without further ado, Brandon, I'll let you take the mic.
Thanks, Brian. Appreciate it. Brian said thanks for having me today, and glad you all could join us. And yeah, just excited to be with you and excited to partner with Headway Capital. As Brian said, my name's Brandon Clace. I'm the VP of Strategic Partnerships from TribeVest. And I'll start sharing my screen here. So we have some visuals, make sure that's working properly. We good to go? Nice.
Good to go.
Yeah, so like I was saying, I work for a company called TribeVest. We've been around since 2019. We provide, back office banking and legal services to groups that want to invest in deals. We've been doing this since 2019, and a couple of years ago, we launched a fund-to-fund offering that we're going to be talking about today. And as Brian said, this allows people to aggregate capital via their own investor network and bring them into deals and safely and compliantly compensate themselves within this fund-to-fund structure. So there's lots of people that are, moving into this space. There's a lot of interest in capital raising. You might be one of those people. And this is everyone from, like Brian said, these are, savvy LPs that are looking to take that next step. They've invested in deals and want to bring in their network and maybe move towards, building their own business in real estate. And this is a great way to be able to do that either as a bridge to maybe syndicating your own deals, but this is something that you can stack deals throughout the year and really build a meaningful business out of this if you want to supplement your W-2 or even replace it. So lots of opportunity here. As Brian said, the way we go to market with this offering, and we're going to be talking about all of this in detail, but the way we go to market with this offering is we partner at the lead sponsor level. So with folks like Headway Capital. And the whole idea here is we figure out a lot of this stuff up front so that once the person comes along and wants to raise capital for this deal, the path is already figured out, right? So we'll get into the details, but the path is figured out. Everything is extremely efficient and turnkey throughout the process. So again, we'll get into more detail, but again, excited to be speaking with you all today. So just a quick disclaimer, I'm not an attorney. We are not a legal firm. I'm not an accountant. We are not not an accountant, but we do provide legal and accounting services. So this is for information only. As I mentioned, I'm the VP of Strategic Partnerships here at TribeVest. I've been working with folks, helping them raise capital for over 10 years, guided dozens of lead sponsors to implement this offering into what they do and work with over 100 fund managers to successfully raise capital through this platform. Really love opening this up and kind of democratizing this space, both because what this does, not only are we allowing folks to raise capital for this deal, but as you can imagine, you're an extension into your own investor network, opening up the private markets to your network. You're providing access that normally wasn't there. And I won't get too much in the weeds, but if you look at the public markets, this is very much how this unfolded as well. Investing in the stock market was once very exclusive, was not something that a lot of people did until financial advisors came along. And once financial advisors came along, that really opened up the stock market. Now, probably most of the people are, invested directly into the stock market or via mutual funds or the retirement accounts. It's very commonplace now. And very much the same way, we're looking, to help do this in the private markets. So, into private real estate, private equity, things like that. So really opening up this space is what we're all about. And this offering is really that gateway. So we'll talk about a few things today, why this program matters, some little context, what it means to be a capital partner. And I'll use some things interchangeably. So capital partner, we say independent capital aggregator. There's also people say fund manager as well. One thing about this space, there's no shortage of terminology. It's one of the things that kind of keeps things a little bit confusing, but those will be a little bit interchanged today. We'll talk about how this program works, how we partner with Headway Capital, and what the process looks like for someone that wants to become a capital aggregator. And then, most importantly, how to get started if this is of interest to you. So, shift my screen around a little bit here. So this is probably the path that most of you are familiar with, right? You find a deal, you write a check, you come into the deal as a limited partner, and hopefully, you're doubling your money by the time that deal comes full cycle. Being a passive investor is amazing, but as Brian said, what if you want to do more? What if you want to start raising capital for deals, leveraging your investor network to, again, start to grow into the space, so to speak?
And Brandon, I want to just quickly add one thing here.
Yeah.
The for those some of our audience, they're just purely passive investors, and this could be brand new to them, right? So, in simple words, I would, again, like you said, there's no shortage of jargons here.
Sure.
But in simple words, what this presentation is about, that if, let's say, you are wanting to invest by yourself, right? And you have no intention to um, work with other people to invest in one of our deals as a bigger investor, by pooling a small set of people, then maybe that's not for you. But there's a bunch of people who want to become general partner, fund managers. So in simple words, what it means is, if you coming along may give you a certain return, right? That's a return that's shared. But if you're coming with a lot of people, with your own network and with your own investors, that return may go up, right? And this is why Brandon and Brian um, came up with this presentation, because we feel important that this information needs to go to all of our investors, for them to be able to make more, get more experience, more exposure, and be able to get engaged a little bit more uh, with our investments. So, Brandon, go ahead, please.
Yeah, no, thanks. I appreciate it. And please feel free to jump in, add color, or anything you think would be helpful for the group. So, yeah, right. So pre-Tribevest, there were many capital raisers that wanted to start leveraging the co-GP model to bring investors into their deal, right? And so this is something where literally you would, have to get access from the lead sponsor, and they would have to make you a co-GP on their deal. But this model is really problematic. It would allow people to raise capital and leverage their investor network to bring capital into the deal. But it was really filled with some headaches. First of all, as a co-GP, you're required to do much more than just raise capital for the deal. And the truth is that most, and where this really became scrutinized by the SEC, were not meeting that criteria when they were coming to the deal. And so, especially when it came to how people were raising capital and compensating themselves, the SEC started taking a harder look at this. And so, again, it became a path that really was not the right one unless you are genuinely a co-GP on the deal, playing a meaningful role in whether it's in operations or in asset management, some piece that you're managing outside of just raising capital. So there was interest, but this path was problematic. The other aspect is, as a capital raiser, one of the most important things here is you want to be able to protect your investor network, right? You want to be able to nurture, grow, and especially if you want to do multiple deals, you want to be able to grow and nurture this network. And you don't want to just be funneling all of your investors straight into the deal directly. You want to create a structure like a fund to fund for many reasons, but one is to protect your network and to keep them kind of outside of the lead sponsor's direct deal. Lastly, if you wanted to, so that becomes the question, right? So how can you raise capital compliantly while protecting your investor network and compliantly compensating yourself for all of your hard work? And so, introducing the independent capital aggregator, like I said, you might a fund-to-fund manager or fund manager. There's lots of terminology out there, but at the end of the day, it's about how can you can pool capital from friends, family, and colleagues. And these are folks, like I said, who have never would have known about this deal without you, the aggregator. So you're playing, not only you're providing access, and you're also, like I said, able to compensate yourself compliantly. So you can scale and protect your network without handing off your investors directly to the lead sponsor. And you can really, again, through this structure, professionalize your capital raising with compliance included, legal handed for you. And there's more to come on that as well. Most importantly, you can earn participation economics. As Sid mentioned, one of the things, the value you bring to the lead sponsor is you're writing a bigger check, right? So your entity collectively, you might be bringing in half a million, million. We see these as big as $2, $3, $4, $5 million. So you're adding large value, and so you're going to get preferred terms above and beyond what you would get as a $100,000 check writer. So you're able to leverage that to compensate yourself. And you're aligning yourself with a proven sponsor, right? So big advantage here is if you were to go out and syndicate your own deals, it's very hard to raise capital if you don't have a meaningful track record. You're able to leverage Brian and Sid's experience, track record. You're aligning yourself with them, and you're able to work alongside them to leverage that experience they have. So here's a quick snapshot of what the fund-to-fund returns might look like in a typical syndication deal. This is just an example. But what we want to do when we put together the fund-to-fund economics is answer a few important questions, right? Is this a good opportunity for the capital aggregator, right? How much are they going to get compensated, and is this worth their time? Is this a good deal for their fund-to-fund investors, right? So what we're ultimately doing is, like we said, we have a preferred term that you're going to be receiving from, for example, Headway Capital for hitting a certain threshold. Maybe that's $500,000, maybe that's $1 million or more. And you're going to receive that preferred term. But then the question becomes, what term do you in turn offer your investors, and what are the returns for your investors, right? Really important question there. And then also, what fees can you charge for managing your fund-to-fund? And that combined with what you're going to receive via the promote, creates your total compensation. So what does that all look like? And that's the picture we want to paint for you. And what's nice is, and one of the reasons we partner, at this lead sponsor level, is that for each deal, we work with Headway to put together this fund-to-fund economics that's specific to the underwriting of their deal, so they can paint this picture for you. So you know that when you commit to raising, again, $500,000 or $1 million via your fund-to-fund, exactly how these economics play out based on the projections of the deal. So you're making an informed decision. It also helps streamline the process as well. So, and we'll get into this in a minute, but when you come to us, we're going to be creating this fund-to-fund structure, and this is your own entity. It's your own bank account, and it's your own fund-to-fund offering docs. And in those offering docs, just like Headway Capital does with their offering docs, they disclose the terms and the fees that they're charging. So you're going to disclose the fees and terms that you're charging within your fund-to-fund. And so we figure all of this stuff out ahead of time to not only give you clarity, but also when you come to us, you know exactly what you want to plug into your offering doc. So it streamlines the process. And that's really important, because one of the issues beyond, like I said, with the co-GP model, one of the issues within the fund-to-fund structure was that people were scrambling around trying to figure out how to execute, right? I need to open a bank account. I need to create an entity. I need a lawyer to create my offering docs. And then I need to figure out these economics and the terms that I want to do. That's a lot to figure out, especially when you're in the midst of the urgency of a deal or a raise, where there's a very, condensed timeline. And so this all helps to streamline that process. So again, one, that entity formation, that bank account, those offering docs are done for you via TribeVest, and you have clarity going in exactly what terms you want to offer your investors and the fees you want to charge. So we can plug those straight into your offering docs, and we'll talk a little bit more about that in a minute.
Hey, Brandon, can I just interject here for a second? So I want to kind of recap for anyone who's maybe joined late or maybe if there's anybody here that's lost. So kind of high level, what Brandon is proposing here and the services they provide in partnership with us is, let's say you're an LP and just using the screen that's on, for example, let's say you have 10 people that you know in your network, colleagues, friends, family, that say, hey, Brian, I see you're investing in all these multifamily deals, you're making money, you're doubling your money, yada, yada, yada. I'd love to join in one of your deals. The traditional way you might be to say is like, I'm just going to send those 10 people over to Brian, which is an option too, if none of this sounds like something you'd be interested in, right? I'm not saying we wouldn't take referrals. We love referrals. A lot of our business is referrals. But some people like that business, bringing people into deals, and they want to monopolize it. They want to make some money off of it, right? I have a lot of friends and families and colleagues that I think would be interested in this, and I want to make a little bit of money from my referrals that I'm bringing in, right? So versus just using a referral method, they're going to go and they're going to, in partnership with you, Brandon at TribeVest, they're going to create something called a fund, and they're going to get compensated for their investors coming into our partnership. And an example here on screen, let's just say you had 10 people, they all brought in 50,000, or you had 5 people that brought in 100,000, or 2 people that brought in 250, doesn't matter. The number you end up pooling together in that fund that gets created by you is $500,000. Not only are they getting returns for investing? Let's say they invest out of that 500. Let's say they put 100K of their own money in, like they normally would in any deal. They raise the other 400,000 from friends and family. Not only are they getting passive returns as an LP like they normally would, but they're also making money on the fund that was created because of the structure of the fund. Is these funds are typically structured in a way that offers slightly better returns to the fund manager because of the amount of capital that it's bringing, right? So if somebody comes to Brian or Sid and says, hey, Brian or Sid, I've got $1 million of interest from people in my network. I want to bring $1 million to your next deal. Well, that's very valuable to us, right? $1 million is a lot of money, and we want to make sure that person gets compensated. So versus just taking that $1 million of referrals, we'll say, hey, why don't you go set up a fund with Brandon over at TribeVest? They'll set all this up for you. It's turnkey. It's I don't want to say easy, but it's as easy as possible. And I know you'll talk more about the structure. In return for that, not only are they getting compensated for the money that they put in, but they're also making money on the other money that got put in as well, through the form of fees and through the form of the fact that we offer a slightly improved return metrics compared to people that bring larger checks like that. So I just wanted to step back and say high level that that's what we're proposing here. And Sid, looks like you had something you want to add as well.
No, just no. I think we all speaking the same information. I think the one thing that I just want to highlight, and you guys have both touched on it, is this is the most easiest SEC compliant legal way of earning more for your referrals, right? Um, and for that, obviously, you have to do some work, right? So you have to um, make a relationship with us, look at the deal, look at the numbers, look at the projection, do some due diligence on us before you can give it to your investors or before you can give it to your friends and family. So um, this model is super famous for this one strong reason, is that it allows you to do some extra work and due diligence for your investors, and that automatically complies as a fund manager, that you don't have, you're not breaking any rules in that matter, versus trying to do a JV with somebody, joint venture, or trying to do a co-GP with somebody, and that creates a lot of work for all of the parties involved to make sure that you're compliant with SEC regulation. Brandon, if I'm saying something wrong in here, please correct.
No, 100%. No, I think that's you guys are spot on. And I think another important part here with the fund-to-fund economics, and that's nice about and why we do all this work up front, is that also one of the things, and it's highlighted here on this slide, is that we also want to make sure that your investors within the fund-to-fund are also going to receive, similar returns as if they went direct to the deal, right? So there's no incentive for them to, try and go around you. They're getting a great deal. You're also able to compliantly compensate yourself. And it all starts with getting that preferred term that we've been talking about. But no, these are all good points. I appreciate you guys chiming in.
Brandon, great point. So as far as we are concerned, we either give the same exact return or maybe slightly higher to people who are coming from the fund of fund groups, because we understand the value of relationship. Is somebody coming in with their friends and family of 5, 10, 20 people, we want that person to to earn a little bit more for the work that he's doing. So great point. But yeah, I mean, if they come directly to us, we would still recommend them to go back from the original contact.
For sure, for sure. So, just to paint a picture for you all, and again, I know everyone's kind of in different stages, right? So there's certainly an opportunity to do a deal, right? But what we're seeing with a lot of our capital aggregators that are out there is we have, just for example, we have a doctor that's worked with us over 15 times at this point in less than 2 years. So 15 different deals that he's done. He's built a significant business for himself, just doing one deal at a time, exactly how I'm describing today, and continuing to tap and build trust with his investor network. My point with this is that while it's great to do one deal, we've made this process seamless enough that you could do 3 to 5 deals per year as a capital aggregator, right? So, and start to look at, if you wanted to, building a meaningful side or full-time business, raising capital in this way, right? So let's take a look at what it looks like if you were raising capital for one deal per quarter for 2 years. That's what this slide looks at, right? And so what you can see here is this turns into a nice business. And so if you've thought about raising capital or even trying to syndicate your own deals, this is a great step forward, right? So, and it's, as Brian and Sid can tell you, significantly less work than trying to syndicate or operate on your own. It's exclusively focused on nurturing your network and finding great partners to work with. And again, you can truly build this into a meaningful business, and you're building your own track record, right? So if you wanted to, at some point down the road in a couple of years, syndicate your own deals, now you have a track record of success that you've built because you've done multiple deals, provided great returns for your investor network over a long period of time. And now you're truly in position, if you wanted to take a bigger step into real estate, to do that versus kind of going from LP direct to operator. So again, just kind of looking more in detail at these slides, you can kind of see what this looks like. And this is, in these examples, this is for a $1 million raise, right? So, and here's kind of how the SPV manager compensation breaks down over a single deal. So you're charging, so this is $15,000. You're getting due diligence fees up front. That's a 1.5% that you're charging for, as Sid said, doing the work with the lead sponsor up front to kind of investigate the deal and do your due diligence. And then you're also charging a 0.25% annually for managing the fund, right? You are rightfully so. You are doing work to manage this fund with the help of TribeVest. And so you are charging fees to do so. And this is commonplace with any syndication or fund out there. There's all both a combination of fees that come in for the work that you're all doing. And then, the most important part, right? You are in this structure, and don't want to confuse things, but within the fund-to-fund structure, you are the GP in your own fund-to-fund, and your investors are your LPs. And so the profit split that you get makes up a significant amount of your compensation. So you can see here when we add these up, you're getting about 12% plus of your $1 million raise. So if you start to look at, what does this look like to do a $1 million raise per quarter for 2 years, again, this becomes significant, right? And a meaningful business, again, if you choose to go that route. So, what's nice is this program that we've put together where we partner with lead sponsors and they're working with their LPs, or even existing capital aggregators are out there to bring them into their deals. This really enables all stakeholders to scale and do things in a really streamlined way, right? So our platform that we built out is built exclusively to support capital aggregators and sponsors, right? So we're not just an investor portal and we're not just a fund administrator. We're really built out this system and platform specifically to this structure. We handle the fund-to-fund formation, right? So that's compliance. So compliance includes we're creating your offering docs. We're creating an entity for you, which is required. We're also opening a business bank account on our platform for you, also required for compliance. We help you with investor onboarding. So once your offering docs are ready, your investors are going to need to sign docs and they're going to need to wire funds into the deal. You're going to have an account manager from TribeVest helping you with that process. And it doesn't stop there. So once you have all of your capital aggregated into your newly opened business bank account, you're going to be wiring your $1 million, so to speak, for example, onto Headway Capital. And then we're going to help on an ongoing basis, right? So now you're going to be getting a single distribution back from Headway Capital and whatever schedule that looks like. We're going to be helping you build a cap table and push out distributions to your investors. And then we're also going to help you with your tax filings and most importantly, your K1s. So as a fund to fund, you're going to be getting a single K1 back from Headway Capital. We'll break that up and we'll send that out to your individual investors. So all the pieces that make this compliant and this structure seamless, we handle all of those aspects for you. So we've got a lot of experience doing this, right? So we've worked with over 150 capital aggregators at this point. That's probably closer to 200 now. We've set up over 200 fund to funds over the last 2 years and helped our lead sponsor partners and capital aggregators raise over $100 million. So we have a lot of experience. We're continuing to iterate on this process and make it more and more efficient, more and more seamless for all parties involved. So we didn't invent the fund to fund. As Sid said, this is a known structure that's been out in the space. It's been known for its compliance and known for its safety. However, in the past, what was holding people back is that it was expensive. It took a long time because you had to deal with your own attorneys. You had to open a bank account. You had to file LLCs, all things that can take time or create some headaches. So lots of hours involved, and it was expensive, right? You have to have your own attorney create these offering docs for you. So if you weren't raising close to $5 million, I mean, like $3-4 million was really a minimum to create a fund to fund just a few years ago. But now we've made it so inexpensive and so efficient. Your startup cost is $5,000. We spin this up so your entity, your bank account, and your legal documents are done in 7 business days, right? So again, back to why do we partner with Headway? Why do we get a lot of these things squared away up front? So that when you come in and you're ready to go and your investors are ready to go, we're able to create this entity and these offering docs for you in 7 business days, which is extremely important when you're in the midst of the urgency of a raise. Back office and compliance, all those things I said, right? The distributions, the K1s, we're filing your taxes for you, keeping you compliant. That's $2,000 a year for up to 10 investors. And then it scales up from there. And we'll look a little bit at that in a minute. And so now we've lowered the minimum that you can raise to about $500,000. Obviously, all deals are different. But if you can, as Brian stated, if you can get 10 investors with $50,000, 5 investors with $100,000, or 2 with $250,000, you're in business, right? That's really the starting point. And that's probably the biggest question that you want to be asking yourself is based on your investor network, friends, family. Is this something you feel you could do today? And knowing that we're going to be taking, the vast majority of everything else off your plate, that's really your kind of key role. So just to look a little bit closer at the pricing and a little bit of a visual here. So like I said, all the things, the entity formation, docs, banking, investor onboarding, ongoing client services, so distributions and K1s, all the way through to dissolution. So at the end of the deal, if it's 3-5 years, we're with you the entire way. When the deal ends, we wrap everything up, put it in a nice file for you so that you can take it and move on to your next deal. So in terms of the cost, like I said, $5,000 setup and $2,000 a year for up to 10 investors. And then it scales up based on the number of investors, primarily because of the accounting services that we're doing. And just for example, if you were to go to an accountant and have him break up 10 K1s for you, it would probably be at least $2,000. So this is extremely affordable and efficient because of the way we do things. Oh, another thing I wanted to point out, like when you're thinking about cost and why the fund-to-fund economics that we were talking about earlier, as you may have noticed, that included your cost, right? So what's nice here is you don't need to think about these costs as, this separate consideration. It's built into the fund-to-fund economics model. So when it's presented to you for a specific deal with and they're a TribeVest partner, those costs are included, meaning that when you look at your investor returns, when you look at your total compensation, that includes those costs. So you don't need to figure out like, oh, what about year 2 or year 3? And I'm going to have these accounting costs or these TribeVest costs. And is that going to cut into my margins? No, it's based on, it's already built into that model so that you're making an informed decision up front based on the projections of the deal. So just a closer look at kind of how all this unfolds and how we can do this in 7 business days. So once you've spoken to Brian and Sid and committed to raise a certain amount for their deal, you're clear on the fund-to-fund economics, you're handed off to TribeVest. You're going to complete a short worksheet for us. A lot of this information you're going to already know because you've kind of determined it up front. We're going to have you sign some documents just as a service agreement for us to get started. We're going to, collect that $5,000 and then we're going to go, right? So we want to move really quickly here, especially in the syndication. There's usually a tight timeline. So we want to get started and get you squared away as quickly as possible. So you're going to be introduced to an account manager that's going to guide you through the process. And then we're going to start the setup, right? They're going to file an LLC for you. They're going to obtain that EIN to open a business bank account for you. They're going to file a Form D, again, back to that compliance. We're going to be creating this fund-to-fund, this 506C structure for you. And they're going to file that on your behalf. So these are all things that are, again, coming off your plate and that we're handling for you. We're going to get you onto our platform. We're going to draft your offering docs in 7 business days. Once that setup is complete, you're going to have another call with your account manager to just get set up to to onboard all your investors, right? So they can sign docs, wire capital into your bank account. We're going to aggregate that capital during your raise. And then ultimately, like I said, we're going to send that wire on to Headway Capital. We're going to set up a cap table for you, and we're going to manage ongoing distributions and yearly K1s, right? So again, this gives a good picture, one, how quickly we're able to do this and how efficient it is, and 2, all the different aspects of why this was, kind of cumbersome in the past and how we've alleviated that so that you get to focus on, again, your investor network and finding great deals. So here's, in a snapshot, right? It starts with the deal. You've got a deal you love. You soft commit to that deal to raise X amount. You receive your preferred terms, and then you're ready to go. You've got the fund-to-fund economics, so you're clear on what the opportunity is. You're handed off to TribeVest. We spin up the SPV, funds wired to the deal, and then we can repeat, right? So if you want to be one of those people that's doing this 3 to 5 times a year on multiple deals with Headway Capital, you can do that, right? So, and the goal here is for everyone, all the stakeholders win here, right? In this scenario. So the GP, Headway Capital, they're getting a single check. You're just one line on the cap table, so there's no additional administrative work for them. They're just sending out a single distribution and a single K1. So it's great for them. for the capital aggregator, right? You're making passive and scalable income, right? Beyond what you would get as just a check writer. You're expanding your network, right? So this is something where you can start to grow your investor network and bring them, really opportunities that they would normally not have access to. You're genuinely helping your investors and providing a service to friends, family, colleagues, and building those relationships. And then your investors, right? These are people that maybe wouldn't have had access before, right? So now they're benefiting in the same way you are now as an investor. They're getting passive returns, right? They're able to diversify outside of the stock market. In many cases, they're going to get tax advantages. And again, exclusive deals are just things that you do not find unless you have someone like yourself introducing the opportunity. So pretty straightforward to get started, right? So if you have interest in this, you can book a call with Headway Capital and discuss with them on any of their upcoming deals. They'll talk to you about kind of your background and what you're planning on doing. You soft commit to a certain threshold based on that discussion, and then you're handed off to TribeVest, and we get you set up and you're ready to raise capital. So we put a little thing here as well. If you want to book a call with Brian, here's a QR code that you all can access and can learn more. And yeah, you're free to connect with me. I'm Brandon, BRANDEN at tribevest.com, or you can find me on LinkedIn as well and reach out to me there.
Awesome. And I'm going to drop the link in the chat as well for anybody who wants to book a call. To hosting everyone. Awesome. Well, that was probably a lot of new information for everyone. So if it's your first time kind of hearing about that, the process of setting up a fund, maybe it was potentially a lot of new terms and terminology. So I'll make sure this webinar recording gets sent out, but I would definitely encourage anyone who might be interested in bringing friends and family, colleagues, people that are in your network into these types of investments where not only can they benefit, they're going to be earning just as good returns, if not better returns than they would if they would just invest directly with us. But it's also helping you earn some extra revenue, right? So it's helping you monetize your network, which is a really important part of this as well. It is, I will say it's not for everyone in the sense that, as Brandon alluded to, the economics don't always make sense if it's less than $500,000. If you're close, if you're, 400, 450, that's not going to make or break it too much. But if you're like, oh, I have one buddy from college that wants to invest, it's probably best just to send us over a referral. We can kind of work through that. But if you feel like you have a strong network of people, this is a turnkey solution. And Sid and I have talked to a lot of attorneys about setting these types of funds up before, and have in the past prior to building our great relationship here with TribeVest. This is as easy as it gets. I will say, kind of starting taking the next step on your real estate journey. They do all the heavy lifting. I mean, if you were to go to an attorney and ask them to set up this type of fund, just the legal side of things and giving you the EIN and all that, I mean, they're going to charge you twice the price, maybe even 3 times as much, depending on where you're at. And then you're going to have to go and do all the other work. You're going to have to find an accountant. You're going to have to go set up your own bank account. You're going to have to do all your blue sky stuff. I mean, there's just so many other things that you're going to have to do. TribeVest does it all, right? Your job, they make it easy to where they do everything for you. They're building this legally compliant system in the background. All you have to do is, of course, answer their emails, fill out some documents, while they put the whole thing together in 7 days, which is, again, just unheard of. If you go to an attorney, it's going to take you much longer than that. And you get to go out there and just talk to your friends and family about why you like an investment opportunity and why you think they should participate. And if they want to join along on the investment, then great. You can invite them into the fund that TribeVest sets up, and you can financially benefit from that. So, Sid, anything else, any other color you'd like to add here?
No, I just want to add last thing. The cost, to almost an open challenge, nobody can find a cheaper cost than this when setting up their own fund. And then more importantly, I just want to. So when I started this business of buying apartment complexes, operating it, doing everything that produces cash in cash flow for investors, literally, I think I was 2 years into this business, and I started counting how many things that I have to get done from the time I buy a identify a property, or start looking for a property, right, to all the way to sell, right? And that's a 5 year duration. And I came up with a list of 35 action items that you have to take, that you have to do. Those action items, starting from building relationship with brokers, finding deal, putting the deal, winning the bid, getting through the contract, doing the due diligence, then doing the takeover, raising the capital, finding the right debt, and I can keep going on and on and on until I get to my 35 points. If you really think that you want to go through all of those 35 points and start your own business, that's probably be your call. But what I've seen in past is the best way to start is to start building a relationship with operators like us, or there are other people out there as well, and get on the platform as capital raiser or capital accumulator. And again, like what Brandon said, right? So you can build this is safest, cheapest, and most effective way to scale yourself if you want to start a business like this. If I would have to go back, 10 years ago, I would have probably done the same way, right? Because it's much easier, a systematic way to grow into a brand new business. And again, things may look very simple and easy from surface, but when you go and start doing it, it's not, right? So devil in details. That one step of creating your relationship with operators like us and doing capital raising through TribeWest or a platform like these is probably one of the most easiest way to start something.
100%. Yeah, guys, one thing I did want to share, and Brian, I don't know if I have access to the full chat, but I just posted in the a link to
we see that. Yeah.
Call it our accelerator. If you can maybe share that with the greater group. So that accelerator is literally and it's free. Our attorney hosts it. This is, I think it's 6 modules, and it's literally a full breakdown of exactly how the fund-to-fund structure works, how to work with and find lead sponsors, even a little bit on kind of marketing yourself or how to kind of self-qualify, what kind of things does it take to be successful as a capital aggregator. It's a awesome free resource. It's like joining a mastermind, and you get to do it at your own pace, and it's free. So please leverage that if this is brand new to you and you want to just learn more at your own pace. That's a great resource as well.
Yeah, no, I agree. I think
one of the questions I have real quick. So when somebody comes in your platform, you create the legal paper for them?
Oh, 100%. Right.
Okay. So I just want to add one point here, right? So when we try to buy a new investment, we go and pay anywhere between $10,000 to $15,000 just for the legal paper, right? That does not include blue filing. That does not include entity creation, bank account creation, none of that. Compared to what you guys are offering, you're doing end to end, including the CPA work, right? So you're taking care of the you're creating the entity, getting the legal document, you're taking care of the blue filing, you're doing the K1 distributions, only for $5,000. That's I think you guys can definitely increase that.
We do check. There is an annual fee as well, but it's to cover the accounting and the use of the platform and distributions. Okay. But no, but to your point, to anyone that's been doing this for years on their own and set up their own back office, just even as a capital aggregator, they all say, gosh, I wish this was around when I got started, right? And to your point, I think we've also heard that a lot as well. A lot of people that jumped from kind of investor into syndicating their own deals wish they would have had an intermediate step that they could have taken. So it's a real nice opportunity for people that are motivated to do a little bit more.
Yeah.
Brian, did we want
Awesome.
questions from the group? Is that, or?
I didn't see any questions in the Q&A, so I think that means our presentation was thorough. But
Okay.
I would encourage anyone, if anyone has any questions, I think education is super important. If this is your first time hearing about something like this, you don't want to ready, fire, aim. Do your due diligence on, of course, the process. I would encourage you to schedule a call with myself or Sid and continue to talk through the process. You can hear from our eyes on how it works. And then, of course, they're able to talk to people on your team. And I would definitely encourage them, and I'll put that in the recording email that I sent out, the link to the accelerator program as well. I mean, just tons of value here, all free resources, all free education, so that if in the next deal we have, or 3 months, 6 months, a year, however long it takes you to feel confident and comfortable with the process, get educated, right? And that's why we're all here. That's why we're hosting this education, kind of opening up people's minds to the idea. But education is definitely important.
100%. And yeah, I can't stress enough how thorough and valuable that accelerator is. So again, from the mouth of a leading and securities attorney and real estate attorney, so a real trusted source.
Perfect. Well, I don't see any questions in the Q&A, so we're going to wrap it up. I want to say thanks to everyone for joining. We host these webinars usually at least once a month. This month's a little bit special. We have a couple of webinars, including this one. So I want to say thanks to everyone for joining, and everyone who's watching the replay. If you have any questions, feel free to reach out to a member of our team or a member of a branding team over at Trivest. I want to say thank you, and hope everyone has a great rest of your day.
Yeah. Thank you, Brian.
See you guys. Take care. Bye.